Do you recommend buying over building?
That's a dangerous question. I think it really depends on self-awareness, like what you're good at and then what network you have. I do really like that business axiom that you should build a business that is sellable. So it's the buy then build. Maybe sometimes it should be more build than buy.
How are you guys viewing organic growth versus acquisition growth?
Think about predictable revenue. Where's my next dollar coming from? By far, the largest driver of organic growth for us is just mining our current customers. And we preach that, like, go see your customers.
Welcome back to JackQuisitions. Today I have Stephen Olmon. How are you doing, Stephen?
I'm doing well. I'm glad to be here.
Stephen, you have we've been connected for a long time through kind of the whole Twitter sphere, as well as a lot of mutual friends. You have quite a backstory of acquisitions, but it didn't always come from acquisitions. You came from kind of a different world. Do you want to start telling everybody a little bit about yourself and your background?
Sure. So went to Texas A&M, proud Aggie. Grew up in a family where my father was a pastor and my mother was a teacher. So didn't grow up in a business family at all. And I came out of school thinking that consulting would mean that I got to like travel to New York and Dubai and collect a bunch of credit card points. And instead, I was at a well-known telecommunications company here in Dallas for a couple of years and did not do anything very sexy. And
that sounds fun.
Yeah, I mean, I knew a couple months in that I didn't want to have the life that the partners at that firm had. And I just wasn't built for it. I wanted to do something different. And so I ended up moving over to a software company that a family friend had acquired with his cousin. And I'd like to joke that I couldn't even spell M&A until I worked for those guys. And they were very kind. They taught me a lot. And over a 4 or 5 year period, got me really interested in buying a business. So that was kind of the beginnings for me. I didn't grow up. It wasn't something that I thought about in my teen years or even in college. Private equity, like none of that was on my radar at all. And so I kind of took a very backwards path.
So what drew you into that world? Because generally it's either you're born into it or your personality pushes you into it, but it kind of sounds like you had a different role, or do you feel like one of those two fit for you well?
Probably one of the most important decisions you can make in your ETA journey is which SBA lender you are going to pick. A lender who will be in your corner to get you closed on the deal, as well as set you up for future expansion. That is why we partnered with Alan Peterson from First Internet Bank. He and his team take a how can we approach, as well as I personally know they specialize in home service acquisitions. Mention the show or my handsome bald head and receive a reduced good faith deposit, as well as a detailed deal review and maybe even a buy-side pre-qualification. No strings attached. Head on over to alanfib.com. That's alanfib.com, or click the link below to get connected.
I think that I got excited because I didn't know that I could do that. Like it felt like a game I wasn't allowed to play. And then I saw a couple guys that were smart and kind of gritty and used some leverage, use some structuring on a deal to be able to go buy a business. And I was like, oh, well, I didn't know that was something that would even be potentially feasible for someone like me to do. And then I also was a pretty early fanboy of Mr. Brent Beshore, read Madison Marketplace.
You and me both.
Yeah, continued to. And actually I was not long ago, I was in Missouri at a Main Street / Capitol Camp, which is just, if you haven't ever been, an incredible event. They do an awesome job. And so anyways, those sorts of inputs led me down a path of being interested in doing that. And then I'd say my wife and I came out of quite a bit of student debt. And so we didn't necessarily have a lot of capital as I left and went out on my own. So I kind of actually went the NewCo, route and started a couple businesses, started to generate some cash on my own to be able to go start to think about buying a business in the future.
So then where do you feel like your first big success was? Was it in starting a business? And then what was that business?
Yeah, it was starting a marketing agency with a partner 8 years ago. And it's one of those moments where you step off. Like we actually chose, like, for me to leave my job 2 months before our first child was born. So, that'll make you work pretty hard. And it just figured it out. And I wasn't really sure, my wife and I kind of had a deal if we burned down a certain amount of savings, then I would go back into the workforce. And thankfully that never happened. But you just kind of get in the game, you try something, start something, and it worked enough to keep going and keep going. And so that kind of built up. I started a couple other businesses, and it just kind of snowballed from there.
You built a few businesses, you've purchased now businesses. Based on today's age and market with where, capital sits and kind of the prime rate and the future of the, I guess, the country, do you recommend buying over building?
That's a dangerous question. I think it really depends on self-awareness, like who you are, what you're good at, and then what network you have. So if someone, I'm going to create a stereotype, grew up with a dad that's a wealth manager, went to SMU, worked in finance for 3 or 4 years, and dad's friends are supportive, that could equal a pretty seamless transition to having access to capital, some equity partners, and maybe go down a path both on your experience and knowledge, and kind of have a more comfortable path to buying a business, like that sort of thing. Like Reg Zeller is a good a buddy of mine, and I've really appreciated some of Reg's candor, over the years, and even recently. I think it's really hard. I think people underestimate it. And so starting a business is what I gravitate towards in terms of that recommendation, to have like a first shot at entrepreneurship, unless you are like really uniquely built and kind of, it's maybe not quite as dangerous, so to speak. But, you know, are you coming from like a professional services environment where you can go hang your own shingle? Maybe you're an attorney, or have been doing due diligence at some firm. You want to go do your own services. Like that could be a pretty good start. Sit back after a few years and then think, should I buy something? So it's the buy then build. Maybe sometimes it should be more build than buy.
Interesting. Yeah, I mean, it's such a loaded question with so much nuance that I always am super interested to hear people's perspective. I generally lead the opposite way of buy then build. That being said, with the same caveat that you put on there, just like, hey, you got to make sure that your skill set actually fits the business you're buying. I think
Right.
what we see too often nowadays, the trope of, hey, the Wharton MBA that goes out and buys a roofing company, but then they can't find a roofing company, so then they go smaller and smaller and smaller, and now they're the ones hanging the shingles without any experience. So it's always a really interesting dichotomy there. So you built a few businesses, you bought a few businesses, you recommend, building maybe first. What are you up to today? I know do you still run those few businesses, or what does your portfolio look like in your day as an entrepreneur?
Yeah, my largest focus is growing Alarm Masters, which is a fire and life safety company in Houston, Texas, and hopefully soon in other places in Texas. Yeah, it's our goal to be kind of like a Texan security company. And I focus a lot on our M&A activity, as well as marketing, kind of oversee some of that, a few other things. But my largest focus is there, and specifically kind of on the M&A side. And then I still have ownership in a few other businesses. I've also sold off or closed down things that weren't successful, definitely not perfect. And I wish I had a perfect track record. That'd be awesome, but not true. Have the failures, have the bruises, to prove that I've been out and around for nearly a decade in entrepreneurship. And so, but yeah, Alarm Masters is kind of my largest focus today.
So how did Alarm Masters come about? What made you focus on the alarm industry as a home service vertical that you wanted to move into?
Yeah, so I started a few businesses. I got kind of interested in this idea of buying a much larger business through the independent sponsorship structure. And I had a couple failed deals where I had committed capital and they didn't work out. And these were both, 8-figure deals. And as those,
sorry, Stephen, to just for everybody listening, there's some people who are newer to the channel, new
Sure.
to acquisitions. What is the independent sponsor model, and why is it a good model or a bad model? Or
the quick summary there is, instead of raising a fund, you can raise deal by deal, whether that's a broker deal or off market. You've typically gotten that really far into the LOI process, where it's under LOI most typically. And then you're going and raising on that deal with a thesis, kind of with a growth story. Oftentimes you'll see people in like a tandem, 2 or 3 people working together. Thomas Ince, some people who, listen to this may know Thomas. He's a,
Yep.
Phenomenal example.
Extremely smart.
And so he's built an empire. I was trying to do a first independent sponsor deal. And I think that at the time, I felt like it fit my skill set of maybe not being so operationally involved and being more on the deal side, which is kind of how my life has played out. But that was kind of the drivers. I felt like I could use my relational and kind of deal making abilities to be a good fit in the independent sponsor world. And so I just had a couple failed deals, and went into due diligence and found some things that it just didn't add up, and so they ended up not working out. And off the back of that, my friend Colin, who I went to college with, sat me down and said, "Hey, let me tell you why we should roll up security and alarm companies in Texas." And I said, I don't know. But if you've ever had the privilege to meet Colin, he's definitely a sell ice to an Eskimo sort of person. And so within 20 or 30 minutes, I was hooked. And what I liked about the industry, what I thought I quickly understood was you could do projects and get nice cash infusion, but you were really building recurring revenue, which I came from a software world, in my W-2 past. And I was like, man, okay, there's a recurring element. Maybe we could apply our segmented sales, kind of software background to more of a sweaty blue collar business. That's interesting. There's some service work and install work. And so just a whole kind of financial makeup. Plus there's like licensure, give you some moat in that industry. And I got excited about it.
So back to the independent sponsor idea. So
Sure.
The idea behind the independent sponsor for if you were to go and do it today would be you go out on the market, you find a deal that you really like on or off market, however it comes to play, you get it under LOI, and then you go to where did you go to? Was it family offices? Was it friends and family? I mean, it seems like if you're getting like a $15-20 million deal, that might be pretty steep of a raise. So like, how did that look for you in those early days?
Yeah, I actually went to some of my network that I had met on what I will call Twitter and not X, because at the time it was still Twitter. The Twitter.
Don't age yourself.
And yeah, that's right. So I went to a few different people, a couple family offices here locally. On one of those deals, it was more kind of family office backed was kind of the trajectory. The other one was someone who had a fund where their LPs like to kind of double down on certain investment thesis and kind of co-invest alongside the fund additionally. And so, a couple different circumstances there. But what I would say is you have to know what your goal is. So some people would think about like this permanent, I talked about Brent, kind of permanent hold, evergreen, that sort of thing. Most independent sponsor deals, you're still playing along the classic 4 to 7 year private equity timeline. And so you have to be aligned with your capital partners and kind of expectations. So that's kind of what I did. But again, very one-off and circumstantial just on who I knew. I think that, there's probably a more disciplined playbook to run if that's what I was really going to focus on doing with the rest of my life. So, but I'm definitely not the foremost expert on independent sponsor deals because I have 2 failed attempts.
Yeah. Why do you think that it was so hard to get to the finish line? Was it more deal related specific or is it the model that becomes an issue?
It was much more specific deal by deal. And that's actually what I like about the independent sponsor world is that it is more kind of unique deals and funding them kind of one off, like just very different sets of economics on those 2. One of them, it was just a value, like we could not totally get aligned with the seller. And actually their business exploded after we didn't end up being able to close on it. And so I feel like I was right. Their business is like near 2x the value of what we were trying to acquire it at. So I feel proud in my failure. And then on the other one, in due diligence, we just found some things financially that unfortunately were deal killers.
Awesome, man. Yeah, it's always interesting. So because I've never had to deal with the independent sponsor method. I bought really, really small.
Yeah.
So it was able to SBA that thing and then just grow from there. And then every add-on we've done has been within the SBA range.
Hmm.
But it's always generally a curiosity for the people that go really big on their deals and how they get there and how to kind of manifest that into existence. And so you get through these two deals that don't come to fruition, and then your buddy talks to you and says, "Hey, let's start an alarm company, or a roll up specifically."
Hmm.
Um, and so what was the first deal that you guys got? Did he come with the deal already, or did he have one? Was this his company? Like, what did that all
Hmm.
beginnings look like of the partnership?
He had spent time in the industry, so he had a lot of contacts, but he was on the manufacturer side.
Hmm.
And so he was selling to guys like us now, essentially, right?
Yeah.
And so he had some relationships, and through a couple of those relationships, we ended up finding the original platform, albeit pretty small, but it was a platform for us. And we were trying to find something, since he was kind of day to day ops, like where he was living, ideally to not blow up his life, and so that worked out. It was kind of a good fit for us, and it was a good start. And so that first acquisition was about 2.5 years ago. And then we've done five since, and we have another under LOI and a few more LOIs that we're considering right now. So we've been running pretty hard and fast the last few years.
Very interesting. And in terms of the goal, what is the long-term goal of this business? Because we talked about permanent hold versus a 4 to 7 year timeline. Like, what's between, if you guys don't mind telling me, what's your goal with this?
Yeah, to be opportunistic, like we like optionality. I do really like that business axiom that you should build a business that is sellable, like that is attractive to buyers. Like you never know what's going to happen in your life, and what if you have some crazy family event or just get really passionate about something else? Like it's
Mhm.
always good to build a business that at any given time is an attractive asset that you could sell and have a big win, right? Like that's great. We're not there today. We are kind of building towards that reality of that we could be attractive like that.
Mhm.
But in the future, do we take chips off the table some and keep rolling? And it's a fun industry. Like it's really awesome. And I think that people are worried about AI in a lot of industries. Like there are advancements in our industry from an AI perspective, but nothing that's threatening like the very like existence of our industry. And so we feel really comfortable in the kind of physical security space for a long, long time.
Most times when people say roll up, I mean, I've used the term for myself. I mean, many people have used the term. It's a hot word, if you will. For true roll ups, usually there's some kind of capital partner that's behind, that's able to really push the acquisitions, right? Because you're looking at,
Yep.
$5 million companies times 10 companies. Like, there's a lot of money on the table. Is this something that you guys are self-funding through yourselves plus the proceeds of the business? Or, if you don't mind me asking, what does that look like?
Yeah, no, great question. So we actually went the SBA route originally on the platform. We used some of our own capital, we used an SBA loan, and we got in the game. And so that was how we got started. And I think our original view was that we would just kind of slow grow it over a very long period of time. And then, funny enough, very relevant for this conversation, we were on a podcast. So you could go listen to, I call him the White Will Smith. I don't know if he knows that,
Yeah.
but we were on Acquiring Minds coming up on 2 years ago. It was pretty early in our journey. We were inside a year, and that podcast came out, and we had a bunch of capital partners reach out. And at first we're like, hey, it's a waste of our time, it's way too early. But there was one group that was really interesting to us, and so we kind of dated for about 6 or 8 months, and we ended up raising some growth equity from a group called Argentum out of New York. And they're really small from a headcount perspective. They're very lean, which we respect, and yet they've had tremendous success, and they've been awesome. Like they've been actually great. Like I feel like most people quietly, closed door, they'd be negative about their investors. And I mean, they've actually just been phenomenal.
That's
So
very
I
cool.
can say that genuinely, blowing no smoke. And so that was a little over a year ago. that we closed that, and that provided some capital to accelerate us from an acquisitions perspective.
Hmm.
And also just on the organic growth side, we started hiring more. We have 4 people on our sales team now, and that's continuing to kind of accelerate. So really, really fun this last year, like taking huge strides.
What were some of your worries when taking on a capital partner? Because I know for people like myself, it's a consideration after your
Mhm.
first acquisition, second, third, fourth. You're like, okay, at some point uh, during the acquisition phase, you're going to reach. I don't want to say internal capital cap, but for me, I mean personally, it's an internal capital. Like SBA will only loan me so much money before I have to go
Yep.
out and find other money.
Yeah.
What does that look like?
My 2 main concerns were that we would partner with the wrong people who didn't actually understand us. We didn't have shared DNA, ideology, like that we would maybe just take money from someone and we really just did it out of desperation or something. But we
Hmm.
really weren't desperate at the time. So I felt like we were choosing to take on dollars when we didn't need them, and I liked that. I felt like a position of power um, in that sense. And so that felt healthy. And then the other thing that was a concern was, would they prevent us from running the business the way that we wanted to run the business? Would they kind of meddle with our strategy, or would they support our strategy? And so that's, I think, part of why the dating process took a while, because we really wanted to make sure that they understood what we planned to do, and that they were truly behind it, not just that they wanted to like deploy capital and just like keep, get another deal
Yeah,
done
exactly.
and tell their LPs, hey, we did another deal, yay, pat us on the back. That it was authentic. And over the course of time, we were really convinced of that. And so, um, you know, did we
Hmm.
give up a notable percentage of the business? We did, but looking back now over a year, we feel really good about it.
Yeah, I could definitely imagine that. And so, I mean, as we're talking about working with like capital partners and old deals that blew up, like now moving into specifics of the alarm industry,
Mm.
um, it's definitely an interesting industry. It's not one that's talked about a ton. When you're going through this acquisition process with these new companies, what are you looking for? What are like the big, I guess, green flags versus the red flags that cause you to either buy or walk away?
Yeah, good question. So we want to see in this industry, if you come from like a software world, you've probably heard MRR.
Hmm.
You can't say MRR in the security industry. It's RMR. Okay, recurring monthly revenues.
Okay.
So I have to be really careful when I talk to friends in the industry, because I'll look silly if I say MRR. So we want to see a healthy ratio of MRR of
You almost did it.
RMR idea of RMR to top line revenue. So 30 to 50%, somewhere in there is what we're hoping to see. 50% is like gold standard. And then if we're kind of above 30%, then we feel like it's, healthy enough from what we're trying to do, because, that recurring, and then the service and inspection revenues that come off of those accounts is like reoccurring, is what we would say. So the recurring plus reoccurring is really kind of some of the biggest items we're looking at in an acquisition, because we want to see that, stacking and growing and retaining. We're looking at attrition for sure. That's a big marker. Where are their sales coming from? Like we're more direct to end user. We don't do all these like, kind of GC bid, RFP
Hmm.
abyss. Like that's not really how we go to market. So we want to see, are we a match? Like, is how they are doing business kind of a fit with the way that we are growing our business? And then also, I would just say like the lines of business, like what are they selling? What are they doing? We do very little residential. We do it some. The
That's
owner
what I was
of a
just gonna
business we
ask.
serve, the owner of a business we serve is like, hey, I want you to do my house too. I was like, yes, sir. Yes, ma'am. Absolutely. But we're not spending $1 of marketing on residential today. It's all commercial. It's heavy, camera, fire alarm, PA systems, K through 12, access control, all of that good stuff.
So in right from a valuation standpoint, in the homes, the big three home services, electrical, HVAC, plumbing, you would actually see the opposite being more valuable, right? That there's higher valuations in residential service
Hmm.
than in commercial.
Yep.
Is it the same in alarm, or is that backwards?
No, it's inverted, right? Because those are two different industries. And so what you're I think if we tried to zoom out, what are the
Well,
qualities
they're two different
along both?
industries in all of the businesses, in my opinion. But that's why, because
But
I
what's
yeah.
consistent, right? Like the stickiness of a customer.
Hmm.
So like on the home services side, you tell me, you're the expert, but ideally you're seeing repeat revenue over the years with those homeowners, I would think, whether it's service calls or some sort of replacement, whatever it may be.
Yeah.
For us, like the stickiness is more so found on the commercial side. Homeowners, they move, whatever it may be, that what we can charge, what we can upsell, all of that is stronger on the commercial side.
Yeah, I guess that, and interestingly enough, is that because usually on the commercial side, it's tied to inventory and product and things like of that nature? So is it like retail, or is it, bio labs? Like where do you see the customer concentration for the B2B side or
Yeah, so
commercial?
it depends where you are geographically. It depends what your focus is. And we actually have a industry specific podcast called Entry and Exit. We just talked about this recently. Like you have to pick a
Shout
lane.
out.
Like yeah, shout out. Plug, shameless plug. We are focusing heavily on K through 12 and universities. That's become a huge vertical for us, right? So I don't necessarily think that certain verticals are the best. It's just what have you chosen to focus on and build disciplines around and a reputation in. Overall, I would just say the stickiness of the customer, the replacement cost or the opportunity cost, switching cost
Hmm.
for them not wanting to move, but then also getting kind of multi-threaded in those accounts relationally, but then also like multi-service. We kind of get deep, and those contracts are typically multi-year.
So when you're looking to acquire a company, I mean, I would imagine that buying or finding a alarm specific, school specific alarm company is going to be kind of a very difficult job.
Yeah.
How does that? How do you view other commercial alarm companies as an opportunity to transition and or grow organically?
If they're vertical, like let's say I was looking at a company in Austin, Texas, and they didn't do a ton of K through 12, but they were, very, 85% of the revenue is commercial. I'm still excited to look at that deal. Obviously, if they were heavy K through 12, it's like even more exciting. But really, we just want to be growing on the commercial side,
Yeah.
making sure they have a healthy amount of recurring revenue and reoccurring. Those are the main traits. Going down to the verticals, we can always kind of bend and shape that over the course of time.
Yeah, and so I don't want to dig too far into this because I mean, these are the questions I'm going to pepper Colin, which is your co-host on Entry and Exit
Yep.
podcast, which is an awesome podcast. By the way, guys,
Mhm.
go and check it out on YouTube, Apple, Spotify. It's in all the spaces. I love it. Specifically, how are you guys viewing organic growth versus acquisition growth? Because I mean, like you said, you want all commercial, but you do have vertical, so it kind of creates
Mhm.
an interesting situation.
Yeah, it's both and. So our think about predictable revenue. Where's my next dollar coming from? For us, we're heavily focused on mining our current base of thousands of customers. And so, our sales team, like they're out constantly
Mhm.
and, 15, 20 appointments a week going to our current customers. And we see a 20 to 30% conversion every time we show up somewhere to a current customer site for net new revenue opportunity. So that playbook is working really well. And we do spend on other like digital channels and, focus on paid
Yeah.
ads and SEO and those sorts of things. We're very focused on organic, but the by far the largest driver of organic growth for us is just mining our current customers. And we preach that like go see your customers.
I mean, that is something that reverberates throughout, I think, all industries, is utilizing current customers. You already have them, talk to them,
Yeah.
be nice to them, and treat them
Mhm.
well. And surprise, surprise, they continue to come back for business. And so I always give guests on the show an opportunity to jump up on a soapbox and talk about something during their acquisition process that they love, they hated. What would you do differently throughout
Hmm.
like your entire tenure as somebody in M&A that you would shake a brand new person getting into this straight out of school who wants to buy a business or who's quitting their W-2, what do you want to tell them?
Yeah, I'll do two really quick. One that's hyper practical is if you're going to use debt, like an SBA loan, whatever, please work with a bank that is familiar with those types of transactions. I see a lot of people that, maybe their dad plays golf with
Oh
a
yeah.
guy who has a local bank in Amarillo, and sure, we'll do that. They have no clue. Like, that's just not a part of what they do typically. I would avoid that like the plague. So I would work with a bank who is funding and lending on those types of
Mhm.
transactions on a very regular basis. On a more personal level, I would say, going back to what I mentioned earlier, like, you need to take an inventory of who you are. You need to be extremely self-aware. I would tell you, go take a couple personality assessments. Ask 5 or 10 trusted people in your life if you think that this is a wise and prudent move for you at this time in your life. I have multiple friends that have gone through bankruptcy, unfortunately, lots of sad stories. I think people are getting excited about buying a business for the wrong reasons. Often it feels sexy, feels splashy, and it's oftentimes the wrong move. And so I think people need to be honest and self-aware.
Yeah, if you listen to this podcast, you will not get the guru push from me. It is a knife fight daily, and
Yeah,
you have to be well. I mean, we were talking about some specific situations right before we started recording that are hilarious
yeah.
to us because we're in it daily.
Hmm.
But I mean, to the average W-2 person would go, "What in the heck are you guys dealing with?" Because it's really a knife fight every day for 1,000 reasons. And so I love those two. Those are two ones that I push all the time. I love it. Thank you for coming on today. Stephen, if there's, where can people reach you? Where can they learn more about you? Where can they touch base with you?
Yeah, I'm really active on LinkedIn and X, Stephen Olmon. And then, like you said earlier, Entry and Exit, it's a podcast that we're, really trying to give practical and tactical advice to small business operators, especially in the security industry, but a lot of it is applicable to other industries as well. And so would love for people to check that out as well.
Awesome. That's Entry and Exit. And like I said, I was right. It's YouTube, Apple, Spotify, the whole nine, correct?
That's right.
Awesome, man. Well, thank you for coming on today. If you like what you heard, leave me a 5-star review. Leave JackQuisitions a 5-star review so that we can keep doing this and having fun. We are slowly gaining followers. Not slowly, it's actually going pretty quick.
Let's go.
Our team's doing a great job on the back end. So appreciate you all. Thank you all for listening, and we will see you next time.